We are covering these 8 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on WRB. Berkley Corporation, a well-established player in the insurance industry, has just made a move that's got the market buzzing. Mitsui Sumitomo Insurance, MSI, is planning to buy a 15% stake in Berkley. But here's the catch. The Berkley family isn't selling any of its shares. Instead, MSI will be purchasing them through either open market buys or private transactions. The twist here is that MSI and the Berkley family have struck a strategic voting agreement that could shape the company's future direction in a pretty big way. Once MSI secures 4.9% of Berkley shares, they've agreed to vote those shares according to the Berkley family's recommendations. It's a big deal because it ties MSI's influence on Berkley's decision-making to the family's guidance. But it doesn't stop there. Once MSI's stake hits 12.5%, the Berkley family has agreed to back MSI's nomination of a director to Berkley's board, though it's still subject to board approval and proper governance procedures. But don't expect any sudden changes in how Berkley operates day to day. The family will still hold 2 board seats, keeping their influence strong. What's interesting here is the sense of stability this deal signals. MSI's involvement could be a big vote of confidence in Berkley's future, especially since MSI won't be making any major governance moves without the family's input. Investors are reacting positively to the news, as reflected in Berkley's 7% jump today. It seems like this partnership could offer a solid mix of stability and growth potential, which investors are clearly liking. Our review on JYD Global Logistics Ltd, a company focused on freight forwarding and international trade, is having a solid day in the market, up 5% today. This uptick likely reflects investor confidence in the company's ability to navigate its core business areas, like cross-border logistics and supply chain management services. The company offers a range of logistics solutions from air and sea freight to land transportation and warehousing, which are crucial for international trade, especially in China, where JYD operates. Additionally, their supply chain management services, which include acting as an agent for international trade, simplify the process for customers and make it easier for them to manage the complexities of global logistics. This growth today might suggest that investors are optimistic about JYD's position in the market, potentially seeing continued demand for its integrated logistics services and trade facilitation. With a focus on streamlining supply chains, it's easy to see why the market would respond positively, especially in an environment where global trade continues to be a focal point. Our review on GFI Gold Fields Ltd, a major player in the global gold and copper mining scene, just saw its stock jump 4.53% following the release of its 2024 annual reports. For those who may not be familiar, Gold Fields operates in key mining regions like South Africa, Australia, Ghana, and Peru, with a portfolio of 9 operating mines. It's a big deal in the mining world, producing millions of ounces of gold annually and expanding its reach in copper too. The annual reports, which provide a comprehensive look at the company's financials, operations, and sustainability efforts, didn't contain any shocking revelations but served to solidify the company's strong financial health and solid footing in the market. Everything seems on track, which is reassuring for investors looking for stability in the midst of market fluctuations. They also announced their annual general meeting, AGM, scheduled for May 28, 2025, and it's set to be an event that'll give shareholders both in-person and virtual access. This is an opportunity for the company to engage directly with investors and offer any new insights or updates on the company's trajectory. But what really seems to have investors excited is the bullish forecast for gold prices. Analysts, including a notable one from Bank of America Securities, are projecting a significant rise in gold prices, expecting them to reach $3,500 per ounce within the next 2 years. This kind of outlook for gold only strengthens Goldfield's potential and could lead to a higher valuation for the company. As it stands, Goldfields is sitting pretty with a strong balance sheet, solid cash flow, and some key strategic acquisitions in the pipeline, including a recent push to acquire Gold Road Resources. These positive factors are not only boosting investor confidence, but also highlighting the company's commitment to growth and operational efficiency, especially with new projects like the Windfall project in Canada and the joint venture in Ghana. All of this combined is driving up the stock price and giving investors reason to be optimistic about the future. So, it's clear that Goldfields is positioning itself to ride the wave of rising gold prices, while also bolstering its operational strength with strategic moves. No wonder the stock is on the rise today. Our review on SLNO. Soleno Therapeutics Incorporated has seen an impressive 42% jump in its stock this week, following the FDA approval of VYKAT XR, the first-ever treatment for hyperphagia in patients with Prader-Willi syndrome, PWS. This approval is a major milestone for the company, as it fills a critical gap in treating the excessive hunger that impacts roughly 12,000 people in the U.S. living with this rare condition. VYKAT XR, which was shown to be effective in Phase 3 trials, is now positioned as the only FDA-approved drug to address PWS-related hyperphagia. The market is clearly responding positively, with analysts raising their price targets across the board. Stifel raised its target from $74 to $108, citing a significant revenue opportunity, while Guggenheim increased their target from $70 to $81, predicting that VYKAT XR could generate up to $1.6 billion in U.S. sales by 2030. With no direct competition for this condition, Soleno is in a prime spot to lead the market. The company's Soleno One program, aimed at helping patients access the treatment, is another positive factor, ensuring reimbursement and access support. Soleno's readiness to launch in April 2025 puts it on a fast track to generate revenue, and analysts are clearly optimistic. The stock is up 6.83% today, and with a strong buy rating, Soleno's future is looking increasingly bright as it transitions from a clinical to a commercial stage. Our review on NFGC, Newfound Gold Corporation, a Canada-based mineral exploration company, is really making waves in the gold space, and investors are noticing. Their primary focus is on gold exploration in Newfoundland and Labrador, and the company's flagship Queensway project is at the heart of its operations. This project spans over 1,600 square kilometers and has generated a lot of excitement, particularly after the company just announced its initial mineral resource estimate, MRE, for the project. According to the new MRE, Newfound Gold has 1.39 million ounces of indicated resources, grading 2.40 grams per ton gold, and another 0.61 million ounces of inferred resources at 1.77 grams per ton gold. This is a major milestone for the company, giving the market solid proof of the potential at Queensway. What's really intriguing is the project's ability to expand. The company has already identified high-grade veins and several additional gold targets, which could potentially ramp up the resource base and increase the overall value of the project. They're not stopping there, either. Newfound Gold has plans to release a preliminary economic assessment by the end of Q2 2025, which will outline the financial feasibility of developing a new gold mine at Queensway. If all goes well, this could be a game-changer, both for the company and for investors looking for growth in the gold exploration sector. With this positive news, the stock was up 3.48% today, and there's definitely more potential ahead as the project progresses. The excitement around the Queensway Gold Project and the company's ability to expand its resources could mean significant upside for shareholders down the line. Newfound Gold is certainly one to keep an eye on, especially with this kind of momentum. Our review on AEVA. AEVA Technologies Incorporated is a cutting-edge player in the LiDAR sensing systems space, developing and selling tech solutions that support automation and perception across industries like automotive, robotics, and infrastructure. Their core focus is on FMCW sensing technology that enables LiDAR to be used in a broad range of applications, including self-driving cars, with products like the Aries 2, Atlas, and Atlas Ultra, which all aim to meet the growing needs of autonomous driving systems. In a recent update, the company announced a leadership change, appointing Catherine Motlach to its board of directors. Catherine brings a wealth of experience in financials and telecommunications, which should be a big asset for AEVA as they scale up their 4D LiDAR technology and work toward mass production. This could be a key move as AEVA pushes to expand its market presence across a variety of industries that rely on autonomous systems and advanced sensors. At the same time, there was a leadership transition as Aaron L. Polek resigned from the board for personal reasons, though it was noted there were no disagreements between Aaron and the company. The leadership shuffle might signal a renewed focus on growth and strategic expansion at AEVA, which has been ramping up its technology to stay competitive in a fast-growing market. The news was well received by investors, as the stock rose 5.17% today, likely driven by the positive outlook on AEVA's future growth with this new board addition. It's clear the company is positioning itself for further development, and the leadership changes could bring in fresh perspectives that support its ambitious goals. Keep an eye on AEVA. This kind of leadership update often signals new momentum, especially as they move forward with their exciting LiDAR tech. Our review on BKD. Brookdale Senior Living Inc. is a major player in the senior living space, operating and managing 665 communities across 41 states, offering a variety of living arrangements for seniors, including independent living, assisted living, memory care, and continuing care retirement communities. They cater to seniors across different income levels and healthcare needs, making it a key provider in the growing aging population market. In the latest news, Brookdale made a strategic move by deciding to exercise its right to settle all of its prepaid stock purchase contracts. This decision is significant as it ties into their larger financial strategy, and with the tangible equity units involved, they're making adjustments to their financial position, which is always important for investors to keep an eye on. These contracts involve senior amortizing notes that are due in November 2025, with the last day of trading for the tangible equity units being March 28, 2025. This move gave Brookdale stock a nice boost, up 4.06% on the day. The market seems to like this decision, likely because it signals that Brookdale is actively managing its financial situation, potentially setting itself up for greater flexibility moving forward. As an investor, it's important to watch how these financial moves play out, especially when a company like Brookdale is handling contracts tied to its long-term obligations. So, this could be a sign that they're positioning themselves to handle future needs and challenges in a way that might benefit their growth and stability. Our review on BLND. Blend Labs Incorporated is a tech company that's changing the way financial providers operate with its cloud-based software platform. They offer a suite of products that help banks and financial institutions streamline workflows and improve consumer banking experiences. Their main product, the Blend platform, powers everything from back-end operations to the customer-facing side of the business. Plus, they offer the Blend Builder platform, which lets customers create their own products using low-code, drag-and-drop tools. They also have a title segment, which focuses on title products and services like insurance, title searches, mobile signing, and post-closing solutions. Now, Blend stock is up by 3.49%, and this is likely due to a couple of factors. For one, their tech offering has been gaining traction in the financial services space, which has been a hot market for cloud-based solutions. With the rise of digital banking, companies like Blend are well-positioned to capitalize on the demand for streamlined operations and enhanced customer experiences. Their ability to integrate various services like title and insurance options adds more value, especially for clients looking to consolidate their workflows on one platform. For investors, the stock price bump shows that the market is liking what Blend's doing, especially as the company continues to innovate and expand its services in a rapidly evolving financial sector. Keep an eye on how their platform growth continues, as this could drive even more momentum for the stock. Please subscribe, give the video a like, and watch more from our playlist. Thanks.